Where to buy mutual funds. If you are a beginner and want to know where to buy a mutual fund, then the simple answer can be either from a brokerage account or directly from a company. However, before jumping to the later stages, skipping the basics is not a way, so let us get started from the beginning with basic information and things you need to know about mutual funds. What is a mutual fund? In mutual fund investing, money is pooled from investors to purchase stocks, bonds and other assets. It is to create a diversified portfolio which an average investor cannot build on their own. There is no need to buy individual securities. Professional fund managers are here to do it for you. Investors who invest in mutual funds own shares in that company whose business is purchasing shares in other companies. Investors can buy shares that goes up or falls in value. That is based on the performance of the fund and its underlying securities. Mutual fund share purchases get final when the market is closed and the total value of the underlying assets is now valued. Now you have to make a choice. What are you looking forward in doing? Beat the market or try to imitate it? It is not an uneasy choice. One approach is more costly than the other, most of the time without delivering better results. Actively managed funds. Professionals manage these funds. These are managers who research what is out there and then buy with keeping an eye towards beating the market. It may be possible for some fund managers to achieve this in the short term, but it has proved already that it is difficult to outperform the market over the long term and on regular basis too. And funds are much more expensive because it involves human touch. Passively managed funds, now an approach that is more hands-off, are called passive investing. It is quite rising in popularity. The reason for its popularity is large because of the ease of the process and also the results it delivers. Passive investing can be the best option for those people who are looking for cheaper funds, and the fees are fewer too. For example, the holdings that are in the S&P 500 index fund mirror those that are in the popular index of 500 stocks. However the fund is performing, it is replicating the performance of the index itself. Therefore, if the S&P 500 went up to 3% for the day, that indicates your index fund was up too. There is no real management in that going on. It has lower fees than an actively managed fund. Before starting, the initial step one must take is to decide whether you want to go active or passive. Let us get started with other steps. Step 1. Calculate your budget. It is the first basic step one must take. Calculate your budget. People often get these two basic questions when calculating their budget and get started. How much I just need to get started? In mutual funds, the providers most of the time require a minimum amount to open an account and start investing. However, some brokers have no account minimum, while others can range from $500 to $3,000. How am I supposed to invest that money? It is one of the great advantages of mutual funds that it has low cost, and with that, they offer to build a diverse portfolio that is across a variety of stocks and bonds. Step 2. Where to buy mutual funds. You need a brokerage account. A brokerage account is what you need when investing in stocks. You can buy them from a corporation that creates the funds such as Vanguard or BlackRock funds. However, each of these options may offer a limited choice of funds. Most investors prefer buying from an online brokerage for the reason they offer a broad selection of mutual funds that are across a range of fund companies when going with a broker. Affordability. You may find two kinds of fees from your brokerage account. Transaction fees from the funds themselves. Fund choices. Some brokers offer hundreds or thousands of funds to choose from that have no transaction fee. There are many types of funds available such as exchange-traded funds. They offer the diversification benefits same as mutual funds, but are traded like individual stocks. Step 3. Build and manage your portfolio. After determining the mutual funds you want to buy, how would you manage your investment? Some smart moves: rebalance your portfolio a year for once, with the goal in mind of keeping them in line with your diversification plan. Stick to your plan, it will keep you from chasing performance. Main types of mutual funds: stock equity funds, bond fixed income funds, money market funds, balanced funds, funds of funds, index funds. Conclusion: there is no doubt if it is an everyday investor, mutual funds may be a great way to build a diversified portfolio with no extra cost or hassle. As mentioned, mutual funds pool money from investors, many of them for buying large selections of stocks, bonds, and other assets. There are so many mutual funds available that consist of a very large variety of different investing strategies. If it's challenging to understand the mutual fund for new investors, one can get help investing in mutual funds by some simple things. if considered, such as mutual fund investment goals. Financial goals you would like to reach by investing in mutual funds will take only a few years away or decades in the future, or child's college education. Stock-based mutual funds may be a great choice for you. No doubt there comes difficulties in the market with any investment, as no investment guarantees a return. Mutual funds are still much safer than some other options, and if one is saving for a shorter-term goal such as buying a home or a car, or any other asset within the next few years, money market mutual fund or government bond fund may be a good option for you. But investors who may want easy access to their money in the near term may consider deposit account options such as high-yield savings accounts. It is for reason they are insured federally up to a minimum of $250,000, cause even if it is the safest mutual funds, still cannot offer that guarantee. That's all for today. Are you planning to buy mutual funds? Comment down below. Don't forget to like and subscribe for more videos.